This program is powered by realestate.com.au. Know the value of your home today. Track your property now.
Let's take you to the housing markets around the country this week, where there was a healthy 1,357 properties up for auction and an equally healthy 86.8% of them sold. Things clearly have not slowed down. Now, in Sydney, not fully affected by the lockdowns until this weekend, remember, there were 434 auctions, 91.7% of them sold. In Melbourne, well out of lockdown, now back and operating, there were 627 auctions and 87% of those sold. In Brisbane, just 49 auctions. Now, oddly here, less than half of them sold. So Brisbane seems to be not quite as buoyant as other capital cities. In Adelaide, 34 auctions, all but 2 of those were sold. And in Canberra, 58 auctions, and just 4 of those were passed in. But let's drill down into the property markets now, which on evidence seem to be taking talk of higher US interest rates very much in their stride. Then there are the lockdowns. Ed Boyd reports.
Sydney's COVID scare is expected to put a dampener on auction activity. Experts say properties will be withdrawn from sale until the threat of infection passes.
I think we'll see an increasing number of auctions cancelled or withdrawn or postponed. This is really what we saw in Melbourne when there was the COVID scare a few weeks back. We just saw that a lot of people realised that people are a bit wary of going out and attending auctions with lots of other people. So I would fully expect that the number of auctions that were meant to go ahead this week, we'll see quite a lot of those withdrawn, but they will come back for auction over the coming weeks.
But despite the hiccup, auction activity in Sydney is still at elevated levels.
But there is very high auction activity still taking place. So if we have a look at a comparison to the same weekend in 2019, so prior to COVID, we are seeing a doubling in auction numbers. So lots of stock on the market. We are expecting still a high clearance rates for those properties that will go to auction.
This week, global markets were spooked by the threat of rising interest rates. The speculation started with some members of the US Federal Reserve's Board of Governors anonymously suggesting rates could rise next year. Chair Jerome Powell eased concerns during a routine appearance in Washington.
We will also, under our new framework, respond to shortfalls only in full employment. We will not raise interest rates preemptively because we think employment is too high, because we fear the possible onset of inflation. Instead, we will wait for actual evidence of actual inflation or other imbalances.
Westpac expect rates to rise in 2023, 1 year ahead of the Reserve Bank. And Commonwealth Bank expect a rate increase in November 2022.
At this stage, everyone is looking very closely at the inflation rate. So we did see a 5% inflation rate in the US. We've seen a lot of the production indices coming out of China hitting almost 10%. In Australia, one of the big challenges now is wage inflation. We have seen the unemployment rate hit 5.1%. It will put pressure on wages, and that is likely to flow through to inflation.
In some respects, we're already seeing some interest rate rises. It is tending to be longer-term fixed-rate mortgage rates, and they haven't gone up a lot, but they are nudging a little bit higher. The term funding facility that the RBA set up during COVID expires at the end of this month, so that could lead to some increases in borrowing costs over the next little while as well. But overall, I think when we actually start seeing official interest rates rising, then that will certainly assist in taking some of the heat out of the residential property market.
Property Exchange Australia, PEXA, captures more than 82% of all property sales across the country. Its data shows Australia's economic recovery has been led by the East Coast property market. Queensland had its best result in a decade, with 203,000 property settlements, up 37%. Greater Brisbane was the standout capital city on the East Coast, delivering a 52% year-on-year increase in settlements.
So the Gold Coast has been tremendously popular, and we've seen that a number of the top performing suburbs in terms of the volume of settlements are in the Gold Coast region.
New South Wales had 218,000 property settlements, up 26%. The regional towns of Port Macquarie, Dubbo and Orange were in the top 5 best performing suburbs in the state for settlements. Residential property settlements in Victoria didn't grow as sharply as the other states due to the extended COVID lockdown, but its commercial property sector outperformed.
So one of the real growth stories in Victoria was regional. So whilst the state was only up 11% year on year, regional areas were up 28%. So a really nice story there, similar to the trends that we saw in New South Wales. I mentioned that another engine of growth in the Victoria market was commercial property. So commercial property was also up, and we saw a total of 53,000 commercial properties transacted in the last 12 months.